All right, welcome everyone. Welcome to the Hurley Investments Market View commentary for the Tuesday, the 27th of May. We basically are going to finish out this month on Friday, but I've got a couple things to go over with you today. First of all, a couple people were noticing that we had short calls on positions. And let's review a short call because apparently it gave a couple of you guys a bit of a panic. A short call means the obligation to sell a stock at a certain price for a certain period of time. You're going to be obligated to sell your stock at a certain price for a certain period of time. Now, something to remember. Some of you were worried about having your stock called away. So really carefully, what do you do if you don't want your stock called away? Simple question. What do you do if you do not want the stock called away? Meaning you don't want to sell it, right? What can you do? Oh, there you go. Buy it back. Or roll it up and out in time for a net credit. You could let it go and buy back in with a stock replacement leap long call. Why do I like doing that one? It should only use profits. You're now only using your profits. Your initial investment is there. You can buy to close it. Buy to close it for a little loss, a little profit, a large profit, a large loss. There are a couple things you can do. I love this group. You all are 100% correct. There's a lot of things you can do. You don't have to let your stock get called away. But yes, we saw the big down swoop. We saw stocks go through support levels. We had short calls on Bank of America, on Apple, on Google, on Nvidia. We did Meta Leap bull calls because we wanted the protection there. MicroStrategy had short calls. Guys, let me just put it kind of simple. Let's make sure I get it right. You have to use the tools that properly fit the trend of the stock. But I love the way you guys are thinking. I wish someone was here to, well, someone that asked me about this. I wish they were here to listen to it. But just because you put a short call on does not mean that you have to let your stock get called away. Sometimes when the volatility kicks up, a short call does a great job when things get reversed of not losing as much money as a long put. So think outside the box. Let's use all of the tools that are available to you, and don't automatically think, well, if it reverses, I'm screwed, my stock gets called away. That is not correct. That is kind of amateur hour. That is someone that hasn't traded long enough to think, hey, what can I do to get myself out of that position? And the beauty of it is normally when things are reversed, it's because the volatility's kicked down, because the threat's not real anymore, and boom, off you go. You get a volatility crush that actually helps you make money on that short call position. So just thinking outside the box, think outside the box. A quick question. Russ says, can you have a short call without owning the stock or the long call? Yes, you can have a short call. That is called a naked short call. But in Hurley Investments, we will never do that. We do not do naked short calls. You can have it. It's usually not allowed in retirement accounts. IRAs or Roths. Trusts don't have them. But yes, you can do a naked short call, which just means you don't have stock ownership or long call covering it. With that said, if that were to happen, your risk is unlimited. I would obviously suggest you don't ever do a short call without a long call or stock ownership. That is not in our repertoire. If we've done that, we've done that by mistake, and it usually comes right off. So yes, you can have a short call without the stock or the long call. That just should not happen to you with Hurley Investments. All righty. Number 2, the art of Trump. Big talk. And then backtrack slash negotiate. I don't know what negotiation happened, but man, to see the chairman of the European Union, I can't say the word, European Union come to the table that quickly. Hey, we want to make a deal. We just need more time. Brilliant. Crushed our markets on Friday. Good thing we already had some positions in place. But the market got used to it. The market called BS. The market called, hey, we know you're going to give them a chance. We know it's just talk. The market recovered 1.2 something percent. It was down 1.8, finished at negative 0.67, I believe. Our concern is, when does he get ticked off and let those tariffs run? Now, don't forget, we do have some reciprocating tariffs. We do have 10%. China's still dealing with 30% tariffs. If you notice China's numbers last week, awful. China's numbers were awful last week. Everything from GDP to industrial growth. I mean, nothing was good last week. It was bad all the way across the board. So with that said, and if you do your channel checks, just at 30% tariffs, China to a certain degree is coming to their knees. Is that a good thing for us? We're going to say yes for right now. But until we find out what we're going to see net for fair trade, knowing that trade is never fair. I mean, let's face it, some countries are always going to protect their specialties, maybe is the best way to say it, but it's going to be what it's going to be. And it'll be interesting to see where we sit maybe more towards the end of the year. With that said, are we going to have to worry about things the end of June? Probably so. We're probably going to be protected towards the end of June, where we'll get another threat. Enough countries aren't coming to the table. Tariffs are back on. It'll be for 2 weeks. We're probably going to do a lot of short calls there. Try to capture the volatility spike, put a short call on, have it bleed off when he says, just kidding, I'm nice, or I'm going to leave him on for a month. At some point, he's going to be ticked off enough, he's going to say, screw it. Let's run tariffs at 145%, and we'll see what happens there. Last week, we got the bonds versus stocks. I'm going to ask this group, where would you rather have been in the last 10 years, bonds or stocks? Stocks. We have a couple stocks. Reason why for stocks? Have a better opportunity. But Kevin, bonds. Think you could have gotten 0% to 1% for 10 years. That's 100% tax-free. Or you rolled your expensive bonds when the rate started to come down and booked a nice profit, because when I put you into bonds, you'll lose about 3.5% out of the gate. That's the bond charge. And every 3 years, I'll rotate you through some bonds. You'll notice I talked about it a while ago, especially when you go into U.S. Treasuries. U.S. Treasuries hold about a 3.5% commission, or out of the 100,000, 96,500 actually get invested, because there's a cost to register the treasuries under your name, which the brokerage does, but I get paid for it. Which means, really, for a while, at least the last 10 to 12 years, it has not been an opportunity that people have been moving towards. I'm shocked at how many people put $1 million into bonds, found out it was only worth $965,000, and made no money for about 6.5 years. Well, there's a coupon rate. There is, and there's a charge for the coupon rate. And at a certain point in time, it was 0.25%, which means your coupon rate of interest of 0.25% was the cost to pay you out the 0.25%. A lot of people were getting a penny from the federal government of interest. There's a very interesting article that talks about it right now in the big picture. Rising U.S. debt and deficits are pushing treasury yields higher. And we think, oh my gosh, there's such a good deal now. But you look at the numbers. Where are they? Oh, that's the 10-year. Where's the 30-year? Um, so to the end, 4.5% yield is not a high yield, but considering it's up 50 basis points since early April, has caused a stir that slowed the stock market's recovery momentum. In the same vein, the 30-year bond yield of 5.03% is not high either, but it's also up 60 basis points since April. So since April, we had 8 weeks where we had a rush. It's interesting because somewhere in here it talks about the bonds not even being at their yearly highs yet. That's something to understand that the 10-year bonds, even though they're up 0.6%, are not up to their highs earlier in the year. But short answer through all this, please go through and read through it. It comes back down to the simple question of, are we in so much debt that we are going to lose our reserve currency status? What do you guys think? Are we so bad that we're going to lose our reserve currency status? I mean, that's the strength of us internationally, right? Internationally, our strength is, hey, we reserve currency status, so we get all the breaks in lending money and currencies going back and forth. We're set. What's the option? I think Sweden is a AAA rated debt lender. But what options are out there? What are those options that are out there? Australia's AAA, Canada, Denmark, Germany, Luxembourg, Netherlands, Norway, Singapore, Sweden, Switzerland, European Union as a whole by 2 of the 3. Switzerland, Sweden, those we kind of like. Singapore, Norway, Netherlands, Luxembourg, Denmark, Canada, Australia, all too small. Interesting comment just came in. None, maybe gold. There's not enough gold either. In fact, the United States went off the gold standard because our debt was outweighed the what we had in Fort Knox for gold. So I actually just looked it up. I didn't realize it. Australia, Canada, Denmark, Germany, Luxembourg, Netherlands, Norway, Singapore, Sweden, Switzerland, European Union, each on 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 countries all still have their AAA ratings. Germany would be maybe the best, but the Germany, I'm surprised. I thought Germany had quite a bit of debt. Largest economy in Europe. Wow, that's interesting. I probably should do a little research here, but that's 11 countries still have the AAA. Our biggest concern for reserve currency status, a basket of currencies would kill USA. And that's probably the best opportunity, is that, hey, the United States has had it too good for too long. Let's do a basket. Let's do 6 currencies that we can trade in without having the exchange rate kill us for our whatever currency our country would have. All right, thoughts on the Harvard International students? Give me your thoughts really quickly. Dumb. I actually felt that the first time too. I thought, boy, what a stupid, petty thing is going on here. But I'll be honest with you, as you do a little more research, I don't know if it's as dumb anymore. Any other thoughts? That's the same thing, but I'll write it down. Someone needs to kick some butt. All right. So my thoughts on the Harvard, it really comes down to 2 parts, right? The money they have and what the students did, right? Harvard has billions of dollars. They make billions of dollars with their billions of dollars. And then they receive money from the government as well. I wouldn't necessarily say it's free money, but can you blame Harvard I need to learn how to type for taking free money? Nope. Now, I'm going to make a comment here. If the students signed a pledge for hating America, voiced, which is going to be a little difficult here, voiced the need to not protect the Israel country, voiced and protested the United States / Trump / US programs. If they hate it so much, send them home. That's perfectly logical, right? Help them on their way. So let me ask you one other question, though. let me ask you one other question, because I know some of you agree with me, right? And unfortunately, it almost seems like it's all of the international Harvard students have done one of those three things. But, and I'm going to say this tongue in cheek, but what's our First Amendment right? What's the First Amendment right? Anyone? Ooh, but that's true. But hold on. The First Amendment right protects freedom of religion, speech, press, assembly, and petition. Now, it's interesting because some of you are going to tell me that is for citizens. Eh, maybe. Bill of Rights, Kevin. Citizens. It's funny because it actually protects freedoms. It's not really the citizens. The verbiage is it protects freedoms. I'll be honest with you. The illegals, they broke a law. They're gone. Mod, how does this protect the market? Great question. Where did our market go on Wednesday when this was announced? Lost 80, almost 0.88 points. And we gained it back at the end of the day. So it's interesting again. It protects freedoms. Trump should probably take back what he's done to those international students. You don't have to like what was said. I know part of it pissed me off when it goes against Israel, but we have the freedoms to say those things. Should it have affected the stock market? Should it even be in our news on CNBC or Bloomberg? Should we have an 80.88, almost 1% drop in our stock market because of this school? Well, Kevin, last week the NBA came in at negative 0.51. Again, if you follow the futures dropped because of something our president did. Did they recover? They did. It recovered, but it washed out E-minis, and To be honest with you, our market was still down 1.81%, but we picked up 0.88% in the early morning hours because of an announcement from our president. Guys, all I'm going to say is for this year, it's going to be a roller coaster. Big movements. Big movements on news, earnings, rate cuts, tax breaks. I could probably throw a couple more things in there, but it's going to be a roller coaster year. There are a couple of you that were texting, that I'm texting, as things are going on. And again, it's kind of neat because in the last 7-8 weeks, no one's yet said, you know what, Kevin, I don't know if I do that. You know what, Kevin, I'm not sure if we should do this. Hey, you know what? We might be a little late to the party on having protection go on for tariff announcements. Or last Wednesday, market was down almost 3%, finished down 1.81. It just was news that's going in there. You are welcome to text me. If you can read into the future, you're welcome to let me know if you want extra protection, not enough protection. But big movements are based on instant news events that are coming out. There's no reason to stay 100% protected, but just understand, how does this pertain to the market? You're going to see moves in your portfolio. You're going to see us do the best we can as we get ahead of news events to say, hey, seems like you're taking puts on and off. We're probably going to do protection for the June rate cut that probably we're not going to have. We're going to get some more short calls on. Take advantage of volatility spiking up and then coming down quickly. It doesn't mean that you're going to lose your stock. It doesn't mean that we're going to sell stock at that price. We're just trying to fit the trends that happen in very, very short periods of time. And that's what our goal is for this year. All right. Earnings. NVIDIA tomorrow after the market closes. That'll be a big one for a lot of us. Do read through bonds versus the stock market in the big picture. We do have a bullish market, but look at the bounce on the, well, let me just circle it. Look at the bounce on the Dow off of the median line. Notice how it basically didn't get above it. 42,364, 42,343. We didn't quite get the Dow Industrial Average to get above the 200-day simple moving average. Next couple days will be interesting. I'll be honest with you, we probably will get a little bit of selling because we've had a nice run on the Dow for the month of May, which means where will our markets end this week? Probably going to go with lower. Some profits have to be taken off the table as we're going to run into a non-rate cut June unless the Fed surprises us. S&P 500 just barely touched overbought. Came all the way down on Friday and hit the 200-day. Not only did it hit it, it broke it. It broke it, and we were really somewhat worried because that means, just as a heads up, technical trading, the fact that it broke it, yes, it might have finished just above it at the end of the day, but the fact that it broke it, there's not enough buy orders stacked up on that 200-day. And the 200-day has been roughly the same price since March. A big tell that if we get a big news event, we're going to be more apt to protect your portfolio, because in one day we broke the 200-day simple moving average. After 3 months of that 200-day simple moving average basically staying the same, right? Take a look at it here. There have been time for big money to build a base and to protect that 200-day. It hasn't happened. The news, Harvard, how does it affect our markets? We don't have the belief from big money to put those buy orders to protect something as big as the 200-day simple moving average. Trillions of dollars are traded upon those support and resistance levels of the 200-day and the 50-day. And on one news event, we broke it. So, for some of you that are asking, seems like you're taking puts on, seems like you're taking them off relatively quickly. That's my reason. Very easily last Friday, we could have fallen down to 55.90 the 50-day. We could have had a 200-point down day. And there's my proof that we don't have a base built from the big money, the hedge funds, the institutional money. It's not there. They've had 3 months to put and reset their buy orders, and it has not been done. There's definitely risk to the downside. Taking a quick look at the NASDAQ. The NASDAQ held an R1 resistance level that's become support twice. I'm more apt to believe that the NASDAQ has better support than the S&P 500. Not only did it not come down to it, but it's holding a previous resistance level that's now become support twice in May. There's more support in the NASDAQ than the S&P 500. If you missed it from last week, I'm going to go so far as to say again, we are still in, can't type, we are still in Mag 7, Rich Tech, big balance sheet stocks, because they don't need to borrow. They don't need to spend more to grow. And technically speaking, I just gave you my reasons why. All right. Think the market's going to end percent. I do think we might come back a little bit. We'll probably gain it back again next week. So if we have kind of a ho-hum drop on Friday, it'll be new money coming back in starting of June. I'm sticking with my 2%, even though the market's a little bit higher than that right now for May. Earnings, AutoZone today, awful. Not a good AutoZone earnings. Missed top and bottom line. Second week of sales, retail sales, Abercrombie and Fitch, Dick's Sporting Goods, Macy's, Hewlett Packard, Nordstrom's, Nvidia, Salesforce on Wednesday. Thursday, again, a heap of retail sales. Best Buy, Burlington, Foot Locker will be interesting. Kohl's, American Eagle Outfitters, Dell, Gap, Marvel, NCAP, Ulta, and Costco. Economic reports. We had a pretty good day today. Shocking. Durable goods were supposed to be down at negative 7.5, only down at negative 0.63. They missed it by 20%. Durable goods without transportation, 0.2 instead of being up 0.1. To have the durable goods orders that far off, pretty interesting, because it usually means one thing. It usually means inflation's coming down. What was the other one today? Case-Shiller. Oh, consumer confidence, 98.0 instead of an 86.3. Consumer confidence flipped this last month. Much higher consumer confidence. I found those very interesting. This week, GDP numbers on Thursday, and they're supposed to be positive. And they're not supposed to be positive, supposed to be negative, excuse me, negative 0.2. It'd be very interesting if they were positive. The GDP deflator still sits at a 3.7. So net, we're looking at a negative GDP. It'll be interesting to see if GDP is flat, though. Pricing, PCE prices, core pricing, 0.1 on Friday. That'll be interesting to see if our inflation is coming down or, well, if it's up less than expected. But if we're negative again for a second month, inflation should not be a worry, which means we should get a rate cut in June. If we're worried about those kind of things, for crying out loud, give them a rate cut. Still letting things run through earnings for the most part. Again, we're trying to be very quick on and off with puts. Republican spending bill is sending yields soaring. So here's another reason for bonds. Read through it. I put it in here. Technically, it's correct, but it doesn't mean that it's correct. And again, I'm doing the tax cuts. If the big, beautiful bill gets passed, I don't come in with a deficit of 3.8 trillion over the next decade. I absolutely cannot make those numbers work. So it's almost like the press is taking these tax cuts as their new tax cuts for us, instead of taking it as, well, this is what we could have got from taxes if they weren't there. So my own calculations, it's weird. I've got a little deficit and then I've got a little gains. I can't make the numbers work, but I'm nowhere close to a 3.6 trillion. The only way I get there, or 3.8 trillion new debt, only way I get that is if they're taking their current tax rates and then lowering them by the 2017 tax cuts And that's not happening. We're just keeping the tax cuts in place. It should be what revenue we were not getting if they got raised back up. And again, yeah, it just, I can't make the numbers work. So I'm still working on that for you guys. Overstock stocks that could do for a pop in this week's market decline. Don't buy it. Just because stocks are down does not mean they're a great purchase. I would not be looking forward to getting in United Healthcare. And the funny thing is, this was, when did this come out? May 24th. This is the updated. There's another version of it. I would not be into United Healthcare anytime soon. CarMax is another one that, boy, looks awful, down 33.5%. I wouldn't be in that one. Fair Isaac, Campbell's Soup, Heinz Kraft. I don't see, just because something's down, that it's a good time to buy into it. I'd be looking for a catalyst on what would move some of these, and I don't see it. I can't find it. The most overbought stocks: GE Vernova, Mosaic, Intuit, Seagate Technology Holdings, Western Digital, CF Industries, JCI Johnson Controls International. Well, that's funny because it's calling it overbought. I follow Johnson Controls. I have a friend that works there. How's Johnson Controls? Well, back up to $101, and that is overbought. I've missed Johnson Controls move. That's an interesting one. 80 to 100. So there's a 25% raise. Boy, is that a volatile stock. We've been looking at new opportunities as we're no longer going to be in Baidu, and Johnson Controls was one of them. I'd have to work those numbers out. Find that very interesting. I really do like Johnson Controls. They've got a good international and national presence. Okay. This was just emailed to me. I found it very interesting. China's economy stumbles as it fails to shake off Trump's tariff gut punch. I verified these numbers off of last week's numbers as they came in. Doesn't necessarily mean it's a gut punch, but definitely take a look at where the trend is for China right now. As I can verify these numbers that they're all correct. I'm not saying that, hey, they're toast. I do think though that they're coming closer to finding a way to reinstate what they were going to do if Trump earned his second, if he had got in for his presidency for a second consecutive term. That's what I think we're going to see in the near future. Interesting article on Boeing that Boeing apparently has a history of momentum. It's been to the downside for the last 4 years, so I'm not sure where this came from, but PI Singh is basically saying, hey, opportunity in Boeing, yes, there is, but it's not because they have a history of momentum. It's because they're making a great amount of contracts, and they still have $1 trillion sitting available to fulfill. European insurance giants take a $3.5 billion hit from the Los Angeles wildfires, and that's not counting the U.S. companies. So understand, right now, and I'm just going to say because California is stupid. Yes, I was born there. There was a time I thought it was the greatest state in the world. Not so much anymore. We haven't got people paid out. There's still some people not back to their homes to dig through the stuff. This has been going on for a ridiculous period of time, but we're going to see insurance companies start to take their hits here as California has dragged its feet on allowing people back into the neighborhoods, allowing people to reprocess or refigure out how they're going to rebuild. Unfortunately, the infrastructure, I feel, is not set up the way it should have been. So California has to come up with money to put in the infrastructure before people are going to get their payouts and that they're going to get their homes or rebuild their homes or rebuild their lives there. Sucks to be in California in that area. And the last one, just a little article that talks about the delays of 50% tariffs on the EU now pushed out to July 9th. So a good way to ruin your 4th of July is to see bickering with the European Union, but at least they came to the table pretty quickly. All right, with that said, any questions you guys have that I can answer for you? Any questions you guys have that I can try to answer for you? Yeah, so let me make a comment. It's interesting because someone else made the comment earlier. If any students, international, U.S. students, what have you, if any of them go beyond speech and go to violence, yes, they should be arrested for assault. So, short answer there. Yes, David, my belief, any students that go beyond the speech and go to a physical altercation, a fight, a beating, an assault, anyone that can't hold their patience that way should be prosecuted accordingly. But again, you do that on an individual basis. All right, I don't see anything coming in. So, hey, I appreciate you guys being here. Thank you very much. Hopefully today I've done a little explanation on that short call. Hopefully I've also done an explanation on why things seem to be coming on and off. And I do think we're going to be dealing with that through the majority of summer until these trade deals get done. The bigger the trade deal, the bigger the areas. China would be a big one. India would be a big one. European Union would be a big one. The sooner those get done, the bigger we're going to see a pop in our market. All right, let's see if I missed any. Doesn't look like it. All right, guys. Hey, no questions coming in. I appreciate you guys being here. Thank you very much. I will work on getting this posted as quickly as I can. Trying to get Dave Westlake to help me out here and get this up and going. Grateful to have you guys here. Hopefully you had a good Memorial Day weekend. Good time to remember those people that have passed. For us, it goes beyond the military, goes to family. And I'll be honest with you, I've got kids named after friends that I've lost in defending our country. So I do take that holiday very seriously. All right, guys. Hey, thanks for being here. Look forward to seeing you next week. It will be back on Monday. And guys, have a wonderful week. Talk to you later. Bye-bye.